The market is slowly recovering today. Palantir price just stabilized. Investors are watching closely. Alex Karp revealed something terrifying, and this pushed analysts to be skeptical. However, another bombshell has been dropped today. Microsoft and Palantir are at the center of it, and this might finally save Palantir from bleeding. What is happening? And what on earth am I even talking about? Well, let me explain. Disclaimer. Okay, today might not be the worst day for Palantir. The stock has shown a bit of resilience, bouncing back slightly and holding steady around the $90 mark. It's not a massive surge or anything, and yeah, we're still in the red, but there are little signs of recovery peeking through. And let's be real, for us in the community, any sign of life is a win. It's like catching a glimpse of sunlight after a gloomy day. The mood in the market is shifting ever so slightly. It's not full-blown excitement just yet, but there's a growing sense that maybe, just maybe, things are starting to turn around. Analysts are watching closely, trying to figure out if this is the beginning of a real rebound or just a temporary pause before another dip. Either way, all eyes are on Palantir, waiting to see if this momentum can actually build into something bigger. So, is this the start of something good? Or just another tease before more turbulence? That's the big question, and we'll be keeping a close watch. Now, one analyst broke it all down and explained what's really happening with Palantir's price. And the big question on everyone's mind, is it time to buy the dip? Palantir took a serious hit, dropping from around 125 to the mid-80s in just 5 trading days. That's a huge swing, especially after the big post-earnings rally. Right now, we're back to where we were before earnings, hovering near that familiar 83 range. According to the analyst, as long as Palantir stays between 80 and 83, it might not be a bad spot to start easing in for the long haul. But if it slips below 79, then we could be looking at another drop, possibly towards 66, an area that might be worth considering for long-term buyers. The past few trading sessions have been wild, and market sentiment has definitely shifted. So, what do you think? Have we finally hit the bottom? Or is there more downside ahead? Let us know in the comments below. And when you step back and look at the bigger picture, the drop is even more dramatic than it seemed. One analyst pointed out that Palantir has now tumbled around 30% in just 5 trading days. That's a massive slide, way more than just a rough week. To put it into perspective, the total market value has taken a hit of nearly $90 billion. That's an enormous amount wiped out in such a short time. It really shows just how intense this sell-off has been. So, with numbers this big, the question is, was this an overreaction, or is there still more room to fall? But here's the thing. This kind of drop might have been inevitable. Sometimes a stock has to take a breather after a massive run-up. And in a way, these pullbacks can actually set the stage for a stronger comeback. One analyst put it simply, no pain, no gain. It's part of the market cycle. Stocks don't just move up in a straight line forever. Corrections happen, and they can create opportunities for those who know how to play the long game. And when it comes to handling all this volatility, his approach is refreshingly simple. He's holding on to his Palantir shares, still keeping it as his biggest position. No panic selling, no second-guessing every dip. Instead of getting caught up in the day-to-day price swings, he's focused on the bigger picture. But that doesn't mean he's just sitting back doing nothing. He's also keeping an eye on other stocks that haven't had their big run yet. Stocks that could be the next breakout plays. Because at the end of the day, the market is always shifting, and while one stock might be pulling back, another could be gearing up for a move. It's a long-term mindset. And in times like these, patience might just be the smartest strategy. But here's where things get even more interesting. Something big just came out today, and it might add even more fuel to the fire. It turns out that CEO Alex Karp is set to sell a massive chunk of Palantir stock, almost $1 billion worth. And that's got investors talking. Palantir has been on an absolute tear since the start of 2024. At its peak, the stock had skyrocketed more than 6 times its value. But that momentum took a hit when news broke that Karp had plans to sell a significant amount of shares. For many investors, insider selling can be a red flag. After all, nobody knows the company better than the people running it. So if they're offloading shares, it can make others nervous. But there's always more to the story. Legendary investor Peter Lynch once said, "Insiders might sell their shares for any number of reasons, but they buy them for only one. They think the price will rise." That's something to keep in mind here. Just because Karp is selling doesn't automatically mean he's bearish on Palantir. He could be using the money for something completely unrelated. And it's important to note, this isn't even close to his full stake. Based on the last available numbers, he owns nearly 100 billion shares across different classes. The shares he's selling amount to about 10% of his holdings. That's a big number, but it's nowhere near a full exit. If he were dumping everything, that would be a different story. But he's not. So now the real question is, should regular investors be thinking about selling too? Or is this just a normal part of the game? But here's the crazy part. On the same day that news broke about Alex Karp selling shares, another massive announcement dropped. Palantir is teaming up with Microsoft in a partnership that could have huge implications for the Department of Defense. One tweet summed it up perfectly. Data isn't just numbers. It's the backbone of decision-making, strategy, and keeping everything running smoothly. Palantir and Microsoft are stepping up to meet that challenge. Their partnership is all about strengthening modern military operations, making sure data flows smoothly and systems work together without a hitch. The goal? To provide the best possible support for the military, ensuring those on the ground have the tools they need to operate efficiently and effectively. This isn't just another corporate deal. This is about shaping the future of defense technology. And with two giants like Palantir and Microsoft joining forces, it's clear that something big is in the works. This is huge for Palantir. A partnership with Microsoft, especially one tied to the Department of Defense, is more than just another deal. It's a major validation of Palantir's role in national security. These kinds of contracts don't just bring in revenue, they open doors to long-term opportunities and deeper government ties. More importantly, this could be exactly what Palantir needs to stop the stock's decline. The sell-off has been brutal, but a high-profile deal like this shifts the focus back to the company's real value. It proves that while the stock may be struggling, Palantir itself is still winning where it matters. If investors take notice, this could be the moment that puts Palantir back on track. And here's the kicker. Palantir's impact on defense might not just stay in the US. It could be making its way to Europe soon, thanks to a major revelation from the US Secretary of Defense today. He just got off the phone with John Healey, the UK Secretary of State for Defense, who confirmed that the UK is set to increase its defense spending to 2.5% of its GDP. And that's just the beginning. There are plans to push it even higher over time. This is massive for Palantir, not just for today, but for its future. The defense sector is one of the most stable and well-funded industries in the world. And if Palantir cements itself as a key player in both US and European military operations, the growth potential is staggering. With the UK increasing its defense budget and other European nations likely to follow, Palantir has a golden opportunity to expand beyond its already strong US government ties. These aren't just one-off deals. They're long-term partnerships that could lead to billions in contracts over the years. And once Palantir embeds itself into a nation's defense infrastructure, replacing it becomes nearly impossible. That's how you build dominance. If investors start to connect the dots, this could be the spark that sends Palantir's stock soaring again. A company with deep government backing, cutting-edge AI, and a growing global footprint? That's exactly the kind of formula that could push Palantir toward that dream valuation of $1 trillion company. When you step back and look at the big picture, today's price action starts to feel pretty insignificant. In the long run, Palantir is setting itself up for something much bigger. With massive deals, government partnerships, and global expansion on the horizon, the future is looking bright. And for investors feeling a little shaky right now, one analyst had some reassuring words. If the market turns around, Palantir could be back over 100 in no time. We've seen this play out before. After past sell-offs, Palantir was one of the first stocks to bounce back, fueled by retail investors and momentum traders who love a strong recovery. So while things might look rough in the short term, this could just be another setup for Palantir to come roaring back stronger than ever. But what is your opinion on this? Comment down below. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money, so don't risk it.
Things just got out of control. The entire crypto market is booming. But when it comes to Shiba Inu, it faces a different story. While the price chart is green, this is not what was supposed to happen. Over 50 trillion Shiba Inu is now in danger. And the impact we might see in this couple of days might be insane. Something that we have never ever seen in our entire history. But what's actually going on? And should we panic? Well, let me explain. Disclaimer. The crypto market is going absolutely crazy today. Prices of almost all cryptocurrencies are skyrocketing, and it's all thanks to Ethereum. Ethereum alone has surged nearly 20% in less than 24 hours. This is especially wild because Ethereum has a massive market cap, making such huge percentage gains extremely rare. To put this into perspective, the bigger the market cap, the harder it is for the price to move significantly. Think of it like this. A small boat can be tossed around by the waves easily, but a massive cruise ship remains steady. Smaller cryptocurrencies, like a small boat, can experience massive volatility because it takes less capital to move their prices. Conversely, larger cryptocurrencies like Ethereum are like the cruise ship. It takes a huge amount of money to cause significant price changes. This makes Ethereum's 20% rise in such a short time almost unprecedented. And here's something interesting. This incredible surge in Ethereum is also dragging other cryptocurrencies up with it. The rising tide of Ethereum's success is lifting all boats in the crypto market. Notably, Shiba Inu, which is built on the Ethereum blockchain, is experiencing a significant impact as well due to its close connection with Ethereum. The ripple effect is massive, creating a wave of positivity across the entire market. But what is happening? How long will it last? And what's with our beloved Shiba Inu coin? Well, let's find out. It all comes down to a buzz around a crypto ETF, similar to what we saw in January with Bitcoin before the Bitcoin ETF was approved. After Bitcoin's ETF got the green light, companies quickly shifted their focus to Ethereum, aiming to secure an ETF for it as well. Almost half a year has passed with very little news or updates on the Ethereum ETF front until today. Something remarkable happened. Eric Balchunas, a well-known Bloomberg analyst specializing in crypto ETFs, updated his forecast. He boosted the likelihood of a spot Ethereum ETF approval from 25% to 75%. Balchunas, who has been pivotal in covering the spot Bitcoin ETFs launched in January 2024, shared his updated insights on X. This instantly sent shockwaves through the crypto markets, causing Ethereum's price to surge over 10% within minutes. Of his post, Balchunas mentioned hearing chatter this afternoon that the SAC could be doing a 180 on spot Ethereum ETF applications. Up until now, the SEAC has been mostly silent on Ethereum ETFs, caught in a debate over whether to classify Ethereum as a security or a commodity. This silence was previously seen as a bad sign for ETF approval chances. However, with a crucial deadline approaching for multiple ETF decisions on May 23 and 24, the pressure on the SEC is mounting. The SEC already knows how intense and vocal the crypto community can be, especially from their experience with the Bitcoin ETF pre-approval period. Back then, the community was incredibly pushy and even angry towards the SEC demanding clarity and action. Now with Ethereum, the pressure is even more palpable. The SAC is fully aware that delaying or denying these ETF applications could trigger a significant backlash from an already impatient and eager crypto community. And just because of this heightened excitement in the crypto market today, Shiba Inu has also surged by over 6%. But here's where it gets really interesting. As Shiba Inu climbed, it hit a crucial price level that has everyone on high alert. A staggering 58 trillion Shiba Inu is now at the heart of an intense tug-of-war battle between bullish and bearish forces. To put that in perspective, This represents over 10% of the entire Shiba Inu supply. According to data from IntoBlock, a staggering 58 trillion Shiba Inu were acquired by 57,000 addresses within Shiba Inu's current trading range. This threshold has now emerged as a battleground where the short-term fate of Shiba Inu's value hangs in the balance. Bulls, the optimistic traders betting on price increases, are rallying to defend this level. They hope to ignite a surge in Shiba Inu's price even more. On the flip side, bears, the market pessimists, are pushing back, aiming to drive the price down and capitalize on potential declines.